BTCCrypto.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief, our free broadcast here. My apologies for starting so late here today. Accidentally let meetings go way too late, and as a result, this broadcast probably not going to be one of my better efforts. So my apologies. Can't win them all, I suppose, but we'll try our best here. I'm going to try and see if we can get the time down on these videos as well. And really, frankly speaking, encourage you to come on the Daily Brief after party. So really, this should be really more of like a tease. So anyway, that's going to be sort of my efforts going forward. Just FYI, I don't even know if there's anybody even watching this. I don't even have the page up right now. So scatterbrained. Let's see what we got here. That was yesterday's. Yeah, so that's going to take me 5 minutes just to pull up the damn page here. All right. So as you can probably tell, Brian's not having a very good Monday. It's kind of funny. I was sitting at theoretically today's supposed to be a holiday for me. How frustrating. But anyway, it is what it is. Hello, Nori. Hello, Constantine. Hello, DMAX. So looks like the regulars are there. Hope you guys are getting value out of all this. And like I said, would like to see everybody migrate towards Omar says it there, Chris. Oh, 15 minutes is enough for free. I kind of like that. So you know what? I think probably now going forward, just to train Brian that 15 minutes is 15 minutes. Chris, you see it's 9:10 there. So I guess where you are, you're on the East Coast. Is it 12:10 for you? 12:11. All right. At bottom of the hour here, we're going to be done here today. And if I'm in the middle of the sentence, we'll just carry it on right over to the after party. So thank you, Chris. Oh God, this damn YouTube. I pull up this YouTube page. I want to see our little itinerary, and of course the production quality of the video, it's all blurry, so I can't see. So I have to maximize the screen, and then that means I can't see the chat interface. It's just one thing after another. Just, it's all coming to a head today because I'm in a bad mood. Anyway, obviously not being a very good sales pitch today, but oh well, here we go. So number one on our list, the breadth indicator. We talked a little bit about this yesterday. Broader market breadth kind of breaking down here, and the short term slipping back below 50, while the medium term still grinding its way higher, which means to me that we're probably having a lot of short term toppy type price action. And I did mention that, of course, we'll go into more detail about bread signals there in the after party. There's your nice little tease. But I did talk to you guys, I guess, yesterday in the Broiler Chicken show about how the stock market's looking very heavy now. I think you could actually even make the argument that very briefly we even did confirm this double top here in the market in the S&P 500. So you can see, yep, we did. So technically, this is a valid double top there. In fact, the first gentleman I ever learned to trade with back in the 1980s, that would be a trade for him, and he'd have his stop just above these highs. So the market is smiling at us. It may not, be enough to trigger you to actually do a trade. That's understandable. But I think if anything, we should all be very cautious. Of course, I spent a lot of time, probably way too much time yesterday, talking about the political situation there in the U.S. with Mr. Biden, and the debate results didn't go very well for him. So I think that a lot of the 1% down in the United States, especially the people that benefit from the environment that we just had there with Mr. Biden over the past 4 years, I think actually probably a lot of them are squaring up positions and planning to get out of the market. because the Democrats, they're not really in that good of a position right now. I'll tell you that much by crackers. Econs coming out this morning. Actually, I think we officially have word that the United States economy is now actually in contraction. So the Fed is getting its desired results. Where am I going to be able to show you this? The econs that came out here this morning, 1st of July, ISM manufacturing came in below 50, which in itself is a sign of economic contraction. And you can see it came in slightly lower than the previous reading. Not egregiously so, but nonetheless, it is a reading below 50. And I think yesterday in the video, I had talked to you about how the Chinese had come out. They always produce their reports on Sunday because they're all half of lies anyway. But they produced a report out on the weekend showing that their economy is also contracting. So on balance, I think the Fed is getting what it wants. They slowed this thing down. Now it's just a question of how long does it take for all these inflation numbers to get back below 2%. Interestingly enough, in my country in particular, the economy is slowing appreciably. Inflation is not been dealt with. But the political cost of the central bank being determined and dogged to get inflation under control is taking a back seat to political special interests. And as a result, they're basically being strong-armed into lowering interest rates. I don't know whether the Fed will succumb to political pressure. It's interesting when you listen to well, I don't know whether you can listen to them or not, but the rhetoric on the debate the other night was that the U.S. economy is still relatively strong. I suppose that's debatable. But anyway, the point just simply being that we actually have now data that will actually paint to the U.S. economy is officially contracting with a print below 50. And I guess you could make the argument based on this. Oh, this is manufacturing. That makes sense because unfortunately, the United States manufacturing industry, I think that's gone the way of the dodo. So actually, that does kind of make sense. Interesting to see what ISM services in the States look like. My hunch is with the aging baby boomers and basically us all turning into serfs, serving them, the services side of the U.S. economy is probably still relatively strong. I still can't wrap my head around this global manufacturing PMI final number. Where does this fit in all of these equations when they do these global S&P things? Technically, that is in expansion because they're saying global here. Is this the whole world economy or is this just the US? I can't figure that out, to be honest with you. But it did come in relatively okay. I mean, that's probably the best way to describe this. And you might even argue with this number actually ticking up that maybe the Fed can't raise rates in the face of that. I don't know. That's a tough one. The headlines, I think basically U.S. factory activity shrinks faster. Basically that's that manufacturing part of the economy. It was interesting reading the rags overnight. I saw a lot of news out showing that European inflation numbers are calming down, and things are sort of quieting down over there in Europe. It is interesting, a mixed bag in the market. Actually, earlier today, this is quite a bit different. We had the Dow stocks all racing higher. And I think to a certain degree, I had sort of mentioned that yesterday. Our screeners recently are showing a lot of bullishness in the financial services sector. They did those stress tests in the banking sector. And I think that's probably the topic that we should probably have on here, but I have other topics. But the banking sector itself, a lot of the stocks within that sector actually feeling a little bit better after that stress test. And actually, I heard that a bunch of them actually raised their dividends. So it was interesting to see on the screeners, like I said, that momentum push signal. And of course, now I'm wasting time. But last week, on our dashboard here, we have some just sort of built-in screeners here. But remember, we had talked about this in the video yesterday. A lot of stocks in the financial services sector, I think they sort of breathed a sigh of relief that they passed their stress test, and then instantly, I thought it was interesting that instantly on the other side of that, a lot of them went and raised their dividend payouts since they met the capital requirements of the Fed and all that kind of stuff. Um, so what am I trying to find here for you guys? I guess over here. It's an interesting split market state here. So when I first woke up this morning, the financials were actually all green and the tech stocks were all red. And now it's completely flipped around. You can see the Dow jumped higher. It looks like tech stocks are catching a bit of a bid here. I did see that Tesla's moving up. Very, very volatile chart. Looks like Apple's moving up as well. So I suppose Mr. Fink, those are two of his sort of, I don't know whether he's still in Tesla or not, but they seem to be doing pretty well here today. Interesting, we did have a drug stock that was actually outperforming. I think that was one of the reasons why the Dow actually was doing better. But you can see some of these financial services stocks were actually very green here early this morning. They've kind of calmed down here now. And fascinating that the old small caps, they just can't get out of their own way. Maybe this might be a commentary that the Fed probably isn't quite ready to lower interest rates just yet. Maybe we're back into that sort of, tech environment. Tech stocks keep getting pushed higher, while the rest of the market just sort of flounders. We'll see. No real major conclusions out of today. Did see oil prices moving back up again. Did have some upside objectives there on the oil market. But the point being, this is probably the biggest concern of mine right now, is I was actually feeling quite optimistic there about a month or so ago that maybe we've finally gotten in front of this inflation problem. But, over the past week or so, I've been talking to you guys about how we banged into this support line. And then all of a sudden, the inflationary pressures are coming roaring back. And this, if anything, this one image here is screaming at us that there's no way in hell the Fed can lower interest rates. And unfortunately, and I have been talking to you guys about this a lot recently, but the higher time frame crude oil chart and energy, sort of the leading inflationary cost push, this still looks like it's pointing up towards banging up against these old highs. And wow, that's a pretty damn green day there in crude oil land. So as long as this is pushing up, then that means that the inflationary pressures are still very strong. And interestingly enough, the people that actually get affected the most by this are the junior stocks, the little part of the market. I suppose specific news that's driving the market, although I wasn't really overly impressed with these headlines, but people in the public are talking about it, so we might as well review it. This roaring kitty person was touting this CHEWY stock. But you pull up the price chart, and nobody at TRI has any business touching a name that looks like this. If you wanted to be a buyer, clearly you can see where the W's are. So coming in and touching it here, you're just asking for trouble. Longtime site participants will know what the statistical probability of this gap being filled in is. And you coming in and buying this is actually a bearish engulfing bar here. You coming in and buying this right here, I think you're just asking for trouble. It is interesting to see that the public started talking about that GameStop when it was doing this, and if you had come in and touched this here, yeah, you would have just been asking for trouble. And sure enough, this thing basically has done nothing over the past few months. And I wouldn't be surprised if this thing has to work its way all the way right back down to the bottom. And if Mr. Chewy now is interested in this name, and actually has no interest in that game stock, well, look out below on that game stock. So, point being, this was one of the major sort of news articles, but really, there's nothing. I wouldn't, if anything, I'd almost even think about buying a put option. But with this kind of volatility, the option prices are probably very, very high and probably not attractive at all. So, not really interested in doing anything there. Um, I thought it was interesting. I actually did have quite a bit of news coming out of crypto over the past few minutes. Thank you, Chris. We'll wind this free video up here shortly. Did have a bunch of news coming out of the crypto space. Sony out of Japan is coming in and taking a position in a big crypto name there over in Asia. So, and the Japanese, they've been involved in crypto actually since day one. Satoshi Nakamoto, that's definitely a Japanese name. So the point being that there was some interesting sort of bullishness there. But I did find it really interesting was I had put out a tweet, I guess yesterday, getting ready for our broadcast on Sundays, a broiler chicken show. And it was sort of the focus of the newsletter yesterday was Bitcoin was really flirting with a very, very dangerous level yesterday on the weekly price charts. This M, I mean, we were basically there. In fact, we even did trade lower than that on the actual weekly candle. And then out of nowhere, all of a sudden, the market just started to lift. And it was interesting. They were passing this around the site this morning. We have a pretty robust community. I think very good traders. Oh, excuse me. Only two. That's bad luck. Anyway, but it was fascinating that, like, literally somebody went in there yesterday and said, "Thou shalt not break down." Because I had even pointed out we were just sitting right on the edge of a cliff. And if somebody didn't step up and defend this story, this thing was in trouble. And of course, if you paint big fat weekly M's on the price charts, the institutions are going to start going, "Fuck, stay the hell away from that damn thing." So it was fascinating. And somebody had posted this that somebody went in and was like literally pumping just a shitload of money into the. Thank you, Hafid. You're such a sweetheart. Just pumping a shitload of money into Bitcoin here on a very regular basis. Like it was like literally a program buy. Thou shalt not break down and close below 61,462. And the interesting thing is when you look at the chart now, you can see now we were nowhere near closing at that level on the weekly basis. There is no M here now. So clearly somebody with some deep pockets that was in a position of authority. It's interesting how they're operating off of Binance too, of all places. But somebody went in there and said, "Thou shalt not break down." And as a result, Bitcoin did not break down. Does that mean that it can't break down in the days and weeks and months going forward? No, I mean, hell, we're still skating on thin ice here. If that bull disappears, this thing could easily go down through those levels. Is this a function? And this is what I kind of think is happening, that we have a fairly significant fundamental event coming up here with this Ethereum ETF being listed. And it does feel as though this is like by the rumor heading into this event. Did have a little bit of weakness come in here overnight. And you can see that we're just sitting right at a pretty significant trend line level. Painted a little inside bar, then started to melt back down. I didn't even really like the look of this bottom. It looks like an inverted head and shoulders. And you can even see yesterday, I was like, can we please get a nice polite structural bottom here to frame this bot? So I don't even know whether this was even tradable. I suppose you could have bought that inverted head and shoulders level right there. Move stop to scratch. So at the very least, if this thing does break through this trend line, we have to trade back to 25 level. You should probably walk away. Having said that, this thing does look like it's still pointing higher. And the ETF, I think, should be a big positive news event. So I would expect that this thing rallies into that event. And I suppose you could show something like that. So this bigger AB equals CD paints an objective there. And now if this goes and flags out, then ABCD, that'll take us up into here. So anyway, you shake it. I still think that this thing is pointing up. And I think to make sure that this ETF IPO, of the ETF goes well, and of course, Mr. Fink makes another, bucket load of money. And there's probably going to be like 10 different ETF derivatives. Kathy Woods is probably going to have an ETH derivative now. ETH ETF. Try saying that 10 times fast. So I think that it's in Wall Street's interest to make sure that this thing is uppy, right? And that the public sees this as a positive event day. Then we'll start spending like the next probably few weeks talking about, ooh, look at these inflows, look at those outflows, look at these inflows, look at all the institutions buying, blah, 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 blah. So on balance, I think this is still pointing up, but I will clearly concede if we do fail through this trend line and have to come back to this 25 level, then it means something's wrong with this story. And that might just be the end of the rally. And you can see price momentum, no real massive divergences here. We're not really overbought. We did have a lot of buying volume come in on that candle to try and keep this thing pointed higher. So I think on balance, I think it's just working its way into this big event. So I mean, there's your summary. And I would still highly encourage the entire public, if you are interested in this crypto story, a lot of these names are completely washed out now. I can't see them. And actually, tomorrow, Tuesday, we'll have TRI CTO on the after party call. So I would definitely make an effort to try and join that conversation. But the point here is you can see, and I was kind of hoping these stupid charts would load. There we go. You can see that there are a lot of W's that are trying to come in here. So I can understand that the traders are starting to pay some serious attention to these cryptos. Look at this little EGLD. So anyway, I think we'll look at this stuff in the after party. I think we'll leave the free broadcast at that. But, there's a good example that, you buy that level, you risk against these levels. And if you're lucky, you get a nice little pop up into 50% levels, and that produces probably like 2, 3, 4 to 1 risk reward. So and seasonally, this is exactly when this stuff is supposed to happen. So, all right, have yourselves a great day. We'll see everybody in the after party. Maybe you people over there on YouTube can help Journey to Coin. Get on the website. I have to hop and end this broadcast. Have yourselves a great day. Slow and steady wins the race. And we'll see everybody in the after party shortly. Bye for now.